Hello everyone. Welcome to the Stock Minds web channel. NVIDIA Corporation, NASDAQ NVDA, continues to solidify its position as a leader in the semiconductor industry, particularly in the realms of artificial intelligence, AI, and data center solutions. The company's recent Q1 2026 earnings report underscores its robust growth trajectory and financial strength, making it an attractive consideration for investors seeking both growth and value. In this video, we will dive into NVIDIA recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About NVIDIA. Founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Priam, NVIDIA has evolved from a graphics processing unit, GPU manufacturer, into a comprehensive technology company. Its product portfolio now spans AI computing, data center solutions, and advanced graphics technologies. NVIDIA GPUs are integral to various applications, including gaming, professional visualization, and increasingly, AI and machine learning workloads. The company's CUDA software platform enables developers to harness the parallel processing power of GPUs, further cementing NVIDIA's role in high-performance computing. NVIDIA financial performance. In its fiscal Q1 2026, ending April 2025, NVIDIA reported revenue of $44.06 billion, a significant increase of 69.18% compared to $26.04 billion in Q1 2025. Non-GAAP earnings per share (EPS) rose to 76 cents from 60 cents, marking a 26.67% year-over-year growth. On a trailing 12 months TTM basis, revenue reached $148.51 billion, up 86.17% from $79.77 billion the previous year. TTM non-GAAP EPS stood at $2.96, a 72.66% increase from $1.71, while free cash flow per share surged 84.18% to $2.91 from $1.58. NVIDIA profitability metrics are equally impressive, with a gross profit margin of 70.11%, net profit margin of 51.69%, and free cash flow margin of 48.52%. The company boasts a return on assets of 53.09% and a return on equity of 115.46%, indicating efficient utilization of its resources. A debt-to-equity ratio of 0.12 reflects a conservative capital structure, providing financial flexibility for future investments. From 2020 to 2025, NVIDIA revenue increased at a 67.3% CAGR, net income at 96.7%, and free cash flow at 90.2%. NVIDIA has proven to be a fast grower in the past and is also projected to grow rapidly in the future as the AI industry continues to expand. NVIDIA Fiscal 2026 Financial Forecast. Analysts forecast NVIDIA fiscal 2026 revenue to reach $199.39 billion, a 52.79% increase from 2025's $130.5 billion. The projected non-GAAP EPS for 2026 is $4.16, up 39.24% from $2.99 in 2025. The consensus analyst price target stands at $162.92 with buy rating, suggesting a potential upside of 20.85%, with the highest target at $220, indicating a 63.19% upside potential. NVDA stock price performance and valuation. At the time this video was created, NVIDIA stock price is $134.81, reflecting an 18.3% increase over the past year, outperforming the S&P 500's 10.9% gain in the same period. Over the past 5 years, NVDA shares have skyrocketed 1,418.9%, significantly outpacing the S&P 500's 93.1% rise, which makes NVDA as one of the best-performing stock in the past 5 years. Despite its impressive run, NVIDIA valuation remains compelling. The stock trades at a TTM price-to-sales (PS) ratio of 25.5, with a forward PS of 16.58. Its non-GAAP TTM price-to-earnings (PE) ratio is 45.29, and the forward PE is 32.53. The price-to-free cash flow (PF/CF TTM ratio stands at 45.62. Based on FinChat data, if we look at the valuation over the past 5 years, NVIDIA forward PS has been trading above the average, while the forward PE and PF/CF have been trading below the average. This indicates potential undervaluation, as NVIDIA is still projected to grow rapidly in the future. While NVIDIA commands a premium valuation, it is justified by its robust growth prospects and dominant market position. NVIDIA growth potential. NVIDIA growth potential remains robust, driven by several factors. 1. Data center dominance and AI infrastructure growth. NVIDIA data center segment remains the primary growth driver, generating $39.1 billion in Q1 fiscal 2026 revenue, a 73% year-over-year increase from the previous year's $22.5 billion and 10% sequential growth. This growth reflects strong demand from major hyperscale cloud providers, including Microsoft, Amazon, and Meta, who account for nearly half of this revenue. CEO Jensen Huang highlighted the successful ramp-up of the Blackwell NVL72 AI supercomputer, which achieved billions in sales during its first quarter of production. The broad adoption of Blackwell architecture across customers underscores NVIDIA technological leadership in AI infrastructure. This leadership, combined with expanding partnerships and new product launches like NVLink Fusion, reinforces NVIDIA's competitive advantage and pricing power, positioning the company for sustained growth in the rapidly expanding global AI market despite regulatory challenges impacting other product lines. 2. Gaming segment recovery and consumer market expansion. NVIDIA gaming segment showed a strong recovery in Q1 2026, achieving record revenue of $3.8 billion, a 42% year-over-year and 48% quarter-over-quarter increase, raising its share of total revenue to 8.5%. This growth was driven by the successful launch of the GeForce RTX 50 series, based on the Blackwell architecture, marking NVIDIA's fastest consumer hardware ramp ever. By quarter end, nearly the entire product lineup had launched, with further growth potential as the XX60 series rolls out. The turnaround is notable after gaming revenues declined in Q4 2025, highlighting NVIDIA's ability to reignite consumer demand through innovation. This performance confirms strong market appetite for high-performance graphics and reinforces NVIDIA's leadership in discrete graphics solutions despite competitive pressures and market maturity. 3. Market position and competitive advantages. NVIDIA holds a dominant position in the AI hardware market, controlling a significant share of the rapidly expanding AI infrastructure sector. Analyst Dan Ives of Wedbush emphasized NVIDIA leadership, calling it the clear chip driving the AI revolution. This dominance grants NVIDIA strong pricing power and customer loyalty, supporting ongoing growth as AI adoption accelerates. The company's technological edge, especially in AI-specific hardware, and its CUDA software ecosystem, creates high barriers to entry for competitors, with ecosystem lock-in reinforcing its market position. NVIDIA deep partnerships with hyperscale cloud providers, enterprises, and emerging AI firms diversify its customer base across industries like cloud computing, autonomous vehicles, and scientific research. This broad customer mix provides resilience against sector downturns and multiple growth pathways as AI applications continue to proliferate globally. Risks to consider. While NVIDIA prospects are promising, investors should be mindful of certain risks. 1. Export controls and U.S.-China tensions. NVIDIA faces significant risks from U.S. export controls on high-performance AI chips, particularly to China, a major market. These restrictions, aimed at limiting China's access to advanced AI technology for military purposes, have already impacted NVIDIA revenue. For instance, CEO Jensen Huang noted a potential $15 billion revenue loss in 2025 due to bans on NVIDIA H20 chips in China, which also cost the U.S. $3 billion in tax revenue. These curbs have spurred competitors like Huawei to develop alternative AI chips, reducing NVIDIA market share in China from 95% to 50% in recent years. Further tightening of export controls or new sanctions could exacerbate this impact, potentially leading to significant inventory provisions and reduced sales. 2. Supply chain and manufacturing risks. NVIDIA relies heavily on Taiwan Semiconductor Manufacturing Company, TSMC, for chip production. Any disruption, such as geopolitical tensions, for example, a potential China-Taiwan conflict, could severely impact NVIDIA's supply chain. Additionally, reports suggest TSMC may increase production fees, which could compress NVIDIA high gross margins, currently around 70%, and affect profitability. Global supply chain disruptions, including shortages of components or delays due to geopolitical issues, could hinder NVIDIA's ability to meet demand, leading to revenue losses or excess inventory. 3. Competition in AI chips. NVIDIA faces growing competition from AMD, Intel, Graphcore, Sambanova, and Cerebras, while tech giants like Microsoft, Google, and Amazon develop their own AI chips, potentially eroding NVIDIA 80% AI GPU market share. Revenue is heavily concentrated, with one customer, likely Microsoft, contributing nearly a fifth of fiscal 2024 revenue, risking growth if they shift to in-house solutions. AI demand may decline as training phases mature and less GPU-intensive inference or efficient techniques like quantization reduce reliance on NVIDIA high-end GPUs. Conclusion: NVIDIA Q1 2026 earnings highlight its exceptional growth and solidify its status as a leader in the AI and semiconductor industries. The company's robust financial performance, innovative product offerings, and strategic positioning in emerging markets like the robotic and automation industry underscore its long-term investment appeal. Despite potential risks, NVIDIA's strong fundamentals and growth trajectory make it a compelling choice for investors seeking exposure to the burgeoning AI and technology sectors. But remember, this is not a financial advice. What do you think about NVIDIA? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.